Next week will mark Trump's 100th day since taking office as his fast-paced administration continues to flood Washington with new policy directives. How have they shaped the markets, and what are business leaders telling the president? Joining me now, PIMCO head of U.S. Public Policy, Libby Cantrill. Libby, you are a very busy woman right now. Thanks for finding us some time. Appreciate it.
My pleasure, yes.
It's even harder than normal to make economic predictions right now. So I thought maybe we'll start with, where were you on January 1 of this year, and where are you now?
Yeah, so in terms of tariffs, we were taking the president very seriously on his threats to impose tariffs, maybe not as seriously as we should have in retrospect. Maybe to put it into context, the effective tariff rate was about 3% in January before the president was inaugurated. Our expectation was that you would see an increase maybe to 10%. That seemed draconian at the time. What we have seen, though, is that with all of these tariff measures, potentially an effective tariff rate of 30%. Now, that's if all of those reciprocal tariffs are imposed in 90 days. We don't think that's likely. Our base case is probably that we land at around a 15 to maybe 20% effective tariff rate. Still very high, but potentially kind of avoiding the worst case scenario. Now, in terms of growth, what does that mean? We came into to 2025 with a 2-2-2 forecast. 2% real growth, 2-ish inflation, maybe a little bit higher, and then sort of 2 Fed cuts. Now we're at closer to kind of a 0 to half a point growth, maybe 3% inflation, and potentially 3 to 4 Fed cuts, although likely later in the year. We think the Fed will probably sit on their hands until they see cracks in the real data before moving forward.
So the numbers you just laid out, the market is looking at those. We've seen what has happened. So are business leaders, of course, and they've been trying to get Trump's ear recently. The Wall Street Journal had a couple of headlines just in the last few days that said, oh, maybe Trump's listening to the markets. Maybe he's listening to business leaders. What do you think he's hearing from them, and what is his reaction?
Well, I think like all of the above, right? Okay. I mean, I think he obviously does pay attention to the markets, both the equity market and then also the bond market. The market, of course, that we think is, he said bonds are beautiful, and we'd happen to agree with him.
As the largest fixed income active manager.
Active manager,
right?
exactly. And then he also, of course, listens to business leaders. We do think he listens to members of Congress. I think that maybe the thing, though, that the markets got wrong was just that they assumed that reaction function would be a little bit stronger between what was happening in the markets and Trump's reaction. So meaning that if the market sold off with these tariff threats, that he wouldn't necessarily impose them. So we do think there is still a reaction function, but what we have seen from him is that he really does believe in this, one, and he both uses tariffs as a means to an end to increase negotiating power over a trading partner, but also as an end into itself, meaning that he likes tariffs. They raise revenue. He does want to rebalance sort of the global trading order. So I think that the sort of upshot here is, yes, do these stakeholders still matter? Of course they do. But maybe they matter a bit less in Trump 2.0 than they did under Trump 1.0.
So, and you have described these as the vegetables.
These are the vegetables, yes.
Economically speaking.
Yes.
And you're waiting for the dessert, which might come somewhat soon. Tell us about the tax policy, which is the dessert.
Yes, and again, of course, our growth estimate, sort of a 0% growth, is sort of predicated that you're going to get maybe less dessert than vegetables. However, we don't really know that. And I think this is sort of an unknown for the market, but the market should be paying attention to the dessert. The dessert is coming, just taking a while to bake, to belabor the metaphor. We will see sort of the first inklings of what we could expect from this tax bill, really next week, actually, as folks come back from Easter recess and what have you. We are expecting a pretty big deficit sort of finance bill. You could see a tax cut up to $1.5 trillion over 10 years of additional tax cuts, in addition to an extension of those expiring individual Trump tax cuts from 2017. So those will expire at the end of 2025. Those would be extended over 10 years or made permanent, in addition to these $1.5 trillion tax cuts. So this could be a pretty big deal for the market, and could actually, again, maybe mitigate some of this concern and uncertainty that we've seen. So
some tips exempted, some overtime exempted, and maybe some relief on the SALT tax?
Yes.
Okay.
And then I think he is committed to having some sort of manufacturing credit for corporations that re-domicile manufacturing here in the United States.
We're out of time. I want to ask real quick, you have 3 to 4 rate cuts. That would be music to Trump's ears.
Yes.
And so you think that's going to happen?
We do think that's going to happen. Again, sort of predicated on that tariffs really do bite, that countries do really retaliate, and there's not some sort of big trade deal, which we don't think is necessarily going to happen.
Thanks for your insights, Libby Cantrill.
Thanks so much. Appreciate it.
Appreciate it.